And D Street succumbed to major selling pressure today. Both the benchmark indices fell nearly 2%. Adani Group stocks led the fall, with Adani Enterprises and Adani Ports sliding close to 20%. If you look at the broader indices, those two mirrored the benchmarks, with the small cap index slipping below the 200 DMA. On the sectoral front, we did see the PSU Bank index down about 5%, while energy stocks were also down, and the losses were led by Adani Transmission and Adani Green. All in all, a bad day if you owned any of the Adani stocks. ET Now Managing Editor Nikunj Dalmia gives his take on what's happening with the markets.
Fear will always fear, and selling will always feed into more selling. Yes, it may have started as a spark for Adani Group of stocks, but then the entire flywheel or the snowball effect will always kick in, and that's how markets move. It starts small, then it becomes big, and then the fear psychosis gets added up. You're absolutely right that this is a very localized kind of a sell-off, and globally also things are under control. The technical aspect, which is a dollar index and emerging market strength, that is intact. The earnings season so far, whether it is banks or IT or what we've heard in terms of commentary from capital goods stock, that is intact. But when you see a very strong reversal in a very large group of stock for technical factors, for factors which markets were not anticipating, it tends to shake the equilibrium of the market. You're also in that phase of the market where FIs are selling, largely because of money moving back into other emerging markets. And third, if these two factors were not enough, the third factor I think is that you got union budget around the corner, where just about everybody is now saying, let's wait it out. It's better to buy a clear trend rather than trying to second guess what the budget document contains. So we are in that phase of the market where you buy stocks in anticipation of good news, anticipation of events. Here markets suddenly are of the view that it is better to play seen rather than blind, if I may use in the poker terminology.
All right, to speak more on what went down today and where this will follow on, I'm joined by Safir, Anand, strategist and investor. Hi Safir, great to have you on the show. You've been prolifically tweeting your views, and everyone's very excited to know what your insight and what your take is on this sort of Hindenburg, which has hit the Indian markets as well today. So let me begin on how you see this, because clearly the bloodshed has gone beyond just the Adani Group of stocks, isn't it?
Yeah, good evening and thank you for having me over. See, we have reached a situation in the market where there is a confluence of several factors at the same point of time. And therefore, the impact on the market is coming from multiple reasons, of which Adani happens to be one reason. There is no doubt that the report is serious, and therefore, to that extent, it has had an implication on Adani Group stocks. But at the same time, immediately preceding this was the China outflow and the FI movement out of India, simply because of the fact that China opened up, caused outflow of money. So there was an FII China factor, then an Adani factor, then a factor which relates to the fact that the best performing sector for the last year, which has been banking, most of the results are out, and therefore now there is going to be at least one more quarter of waiting for the next set of good news. In between, there's nothing really that is going to happen much with banks, and to some extent, when there is a jittery mood, the way some people behave in terms of market is that they start selling what has given them returns, but they log on to whatever is giving them losses. That is how behavioral science is, as far as retail investor is concerned. And the fourth is the fact that we are all moving towards a union budget, which is just a few days away. And there is this huge hue and cry in the market and fear in the market that there will be a tinkering of long-term capital gains and short-term capital gains, and therefore that may not be to the interest of the market, which undoubtedly it will not be. And therefore the confluence of all these factors is making the market more jittery than it should be.
Is this more now a lot of local fears, domestic factors that you're seeing, Safir? Because, you of course spoke about China, that was there in the horizon. Global markets seem to have sort of settled down. That initial part of the year, first part of January, where recession fears were plaguing, that fear seems to have receded. So we're going to look at a lot of domestic factors going forward?
Actually, we will look at global factors also, because at some point of time, the fact that the global market is doing well will be a plus for India. The question will we catch up with the global market? Will we outperform it, or will we underperform it? But it can't be that the global market will go up and India will continuously go down. That's not likely. Simply for multiple reasons. For example, if you have a global portfolio and your portfolio starts going up, then your allocation to India as a percentage will fall, and there is no doubt in the world that India is going to grow. The debates are not on growth; it's on issues that seem to be more temporary in nature. I'm not specifically saying commenting upon the Adani issue. I'm commenting upon a larger part of the market. So some of these issues will be temporary. Of course, if the global market slows down and goes into a negative terrain, then we would be in line with what is happening there. So you're right that the issues right now seem to be more India related, and hopefully looking at the global market, I do believe, or I do sense, at least in my personal view, that India will catch up at some point of time or the other, particularly once the union budget is over.
Yeah, so let's talk about the union budget and the big concerns there. There seems to be more of a negative fear than the expectation of anything positive. Is it all about the LTCG? And these rumors that keep sparking every few years that there will be some sort of tax implication. How do you look at the overall impact of the union budget?
So you're absolutely right. The fear seems to be stemming from A, long-term capital gains, B, short-term capital gains, and whether there's going to be any tinkering insofar as the FII investments in India are concerned. The third is the easiest, which is the fact that the government of India is itself cognizant of the need for foreign direct investment and FPI investment, and all throughout in the last several budgets, they have been, wherever, for example, a policy has been made, even if it is outside the budget, the government has been very cognizant of the policy, and where if it felt that an error has been made, it has done its best to correct the error. So I don't, first of all, believe that the government will do anything that is against foreign direct investment in any form. Now, coming to long-term capital gains and short-term capital gains, I do not personally believe, given the robust collections that the government has of taxes, that at this point of time, 1 year before the election year, they will actually tinker and mess up with the capital market and mess up with the divestment plans and other plans that they have. I feel that the budget will be more like a sort of a non-budget as far as capital market is concerned. On the contrary, there may be a slight increase in the exemptions of the tax-free income. That level may go up, and to that extent, it may benefit consumption stocks and through consumption, other related sectors like banking. But I don't think the budget is going to be negative in any sense.
You have been saying, and an interesting tweet you put out just a short while ago was where you said, my grudge on market is not the fall of Adani stocks, where I don't even have shares. My grudge is the way that the panic is spreading. You said there's so much panic, right from banks to belief on LTCG to STCG, etc. What do you think really the trigger is? Because, through the last several months, India seemed to be an outlier. Where we were marching to our own drum, the fundamental story seems very strong, the bright spark, etc. And that has not changed fundamentally. Nothing in that story has specifically changed. We have one rumor and one report, if you really bring it down to it.
Yeah, you're right. You see, when you look at FIs from an India perspective, today there was a very large selling figure of almost 6,000 crores from FIs. Now, FIs in India are essentially of two kinds. There are long-term FIs that are investors in a pure sense, and then there are FIs that are more in the nature of hedge funds and momentum funds that come and play what is called a swing trades. I do believe that given the nervousness around Adani stocks, their first reaction is always of defense, and many of them may have possibly sold banking stocks, or they may have even sold Adani stocks. I'm not sure what is their holding in Adani stocks, but generally they exit. And then what happens is that there are momentum players who have built up positions in F&O or people who are trading by calls and puts and speculating in every way. And then there's a catastrophic effect of that reaction. I don't think that this is a market where a genuine investor would be selling. It's different that if he is selling for the need, for example, if he's buying a house or a car or something like that, I don't think that this market he would be selling. Even if he's selling, he would be switching and buying something else, for example, exactly what I did. But I think this is more like a momentum trade, and once it stabilizes, I do think the market will gather momentum. Let's also not forget that there was a DII buying of almost 4,200 crores today, vis-a-vis the FI buying. So it's and that compared to the last few days went up. So that's a sizable number. I also believe that the 20,000 crore FPI of follow-on offer from Adani Enterprises is also limiting the ability to support the market, because if you're committing to a issue in some sense, you're not going to be left with adequate amount of capital to deploy in the market other than for the FPO. So I do believe that is also a temporary thing that will probably get over on Tuesday or whichever day the follow-on offer closes. And then we are left with the union budget on the 1st. And after 1st, I think that life will be back to normal. See, the question is not about timing the market between now and 1st, because that's a very difficult call to take. And if I claim that I know it, I would be wrong. The point is that you're looking at buying companies that had very good earnings. In some of the banking cases, the earnings are really, really high double digits. I mean, you're moving more towards the 60 to 70% mark. And all of a sudden, you have cracked them as if all of them are sitting with this exposure that stands, naked in a sense. But in reality, their business has moved to a trajectory of, moving away from significantly high NPAs to low NPAs. The credit cycle is about to start. People like Mr. Deepak Parekh, who are, have a great vision about the country, are coming and saying, I've never been more optimistic about India. And a true investor will look at the return that he will have over a period of time. Now, if he has to bear 5 days of pain or 5 days of indifference to get, for example, 5 years of return, and you talk about a 10% vis-a-vis, for example, double or tripling or even more than that of your money, then what will you choose? You will only choose the opportunity of doing what has always worked and is never debated, which is a systematic investment program.
What is your advice right now, Safir? How would you play this very tumultuous time? Because generally pre-budget is, a time when people are prepared to make their bets, and then this new factor has sort of come in and changed the game. So how are you playing the markets right now? What is your strategy?
So, when the market was somewhere around the 18,200 mark, you looked at your portfolio and said that, is there something that you would like to buy? And the answer was getting difficult, because what was doing good, for example, banks. And what was not doing good was at the cusp of a turnaround, where you believe that because of credit cycle or capex cycle, like infrastructure or capital goods, you would do well over a period of time. And I do believe, and I still think that the budget is going to be significantly positive for the capital goods and the infrastructure and economy sector. But as of today, what has happened is all of a sudden you have a report card of knockdowns, and you can, for example, look at a bank which is down 10%, or you can look at a cement company that is down, say, 20-30%, and look at your portfolio and say that, do these make better opportunity cost for me to make returns? Now, if I look at, for example, a cement company that has been battered out of proportion today, which is Ambuja Cement, I have to look at it from what do I see it as an investor. Forget sentiments. Do I see an enterprise value? Do I see a cement capacity? Do I see 15,000 crores of cash? Do I see the possibility of margins, that is the EV per ton going up, etc.? And if the answer is yes, then I don't have to spend more time in deliberating. But if I look at a company where I do not understand the company, which does apply in some of the other stocks that have got battered, then I am fine in ignoring those and placing my bets on what I do understand. For example, there are banks that don't even have exposure to the companies that you're talking about, and which are called the market meltdown, and they've got.
Why do you think that's happened, Safir? Why do you think the all-round battering? Because this report came out, there was a response, but it's like a fire sale suddenly. So
no, because you're taking a countdown from the budget. You see, if the budget was not there on the 1st, then people would. There is a fear in the market that is coming from the budget. That fear in the market meets the FII selling. That FII selling, and FIIs are very critical for the market. We may say whatever. It's the end of the day, the amount of money that they can dump in a single day becomes very large for anybody to absorb. And they look at a certain sector, because when I mean a sector, I mean there's a certain category of companies that they own. They don't own everything else, but it has a sort of a counter effect on many other things. So I don't. That's how you should see the market. And sometimes the opportunities may sound very fearful, but that's where the real opportunity lies. And I don't feel that there's going to be any catastrophe as far as the Indian economy is concerned or as far as the budget is going to be concerned.
How would you play the start of the next week? Would you wait and watch to see what's happening in the budget? What would be your take there?
Well, like I tweeted today, was I bought a lot of cement in a lot of banks, and I'm not feeling uncomfortable about that. I just don't find the logic. I mean, to say that they will go up with effect from Monday and therefore they cannot fall more would be absolutely wrong. But do I see a significant upside vis-a-vis my downside? My answer is I do.
And, even ahead of the budget, there's going to be a Fed meet, the whole global economy concerns continue. What is your take in a slightly more long-term scenario?
I feel the problems of US in terms of the federal rate hike are nearing an end. They maybe 1 or 2 or 3 months more of sort of this tapering sort of the thing that is going on that will continue, but I do not think that it will last beyond that. The economy has been much more resilient despite this. Inflation is now started getting under control. The commentary that is coming from the US companies, barring the tech sector, does not seem to be really so worrisome. So I don't think that really that the US, in fact, even at the Davos forum, they have upgraded the outlook on the world economy. So I don't think right now we are so off track to be sort of taken for a ride as far as US interest rates are concerned.
And specifically, if there are investors out there who had or have positions in the Adani group of stocks, what would you tell them to do?
Well, I'm clueless on something that I don't understand, and I try to restrict myself on what I do.
Fair enough. Thank you so much, Safir. Pleasure speaking with you on the show today on such an important day, and hopefully the calm and peace will return to the markets. Safir Anand there with his take on the market mayhem that we've been seeing. Now,